Ladies and gentlemen, welcome to the grand knockout stock picker presentation. East versus West. I'm pretty excited about this one. And in the red corner, we have Tony Locantro from the West, the stockbroker with the most, the guy with the big mouth, the guy that understands stockbroking better than most. And from the East, it is not Daniel Ryan. It is the wonderful, the effervescent, the ever-smiling Shae Russell, Chief Editor of the Daily Reckoning Australia. Ladies and gentlemen, this is going to be a knockout round. They're going to talk to you about what's good, what's bad, who won, who might not have won. We're going to have a lot of fun because at the end of the day, ladies and gentlemen, here's my advice to you. Do not put a dime of your money into these crazy volatile markets unless you know what you're doing or unless you understand what Shae and Tony are going to talk to you about or become their clients, even better. Hey, Tony, Shae, welcome to the virtual gold conference. And I forgot to mention, the reason we're doing this is because it was October 2019, in the good old heady days, when we could actually meet face to face. And these two were on the stage. Shae had just finished doing a keynote presentation. The wonderful Tony was the MC, and they decided to do a competition on who was the best stock picker. And so in 2020, at the Gold Conference, we were going to have a bit of fun with it up on a stage. Well, it's not a stage, ladies and gentlemen, but it's as good as we can do, given, and guys, who knew at that time when we were chatting, if I'd told you we're going to be all in lockdown and there was going to be a coronavirus, you would have thought I was insane. Welcome, both of you.
Thank you, Kerry.
Hello, whatever time it is.
It's coming up lunchtime, my friend, and actually I will say this, it's just after 12 o'clock on Thursday, so we're going to take a little bit of a break after you guys talk, but there's a lot to talk about today. So to kick it off, I'm going to start with you, Shae. I'm going to share my screen and let's share some of the stocks that you chose for the East versus West. Now this is the East. Here we go.
Shae, these are the Eastern picks. So before we start going through it, Kerry, you were quite polite there with the introduction that you made for myself and Tony. So what happens? Basically, Tony and I literally put our careers on the line. We both make our money from, recommending or investing in gold stocks. So I just want to emphasize this could have all gone terribly wrong for the both of us. And there was a chance that one of us was going to walk away with our tail between our legs. But I believe we'll find out if we've still got a career at the end of this, won't we?
We're not saying a word yet, Shae, not yet.
Listen, I remember the day I rang Tony with these picks, because Tony and I were quite open once we'd made our recommendation. And I remember going through the list and he's like, yep. And then he said, so what's your wild card? And I said, Thompson Resources. And his answer was, that's tin. And I said, yeah, I know, but hear me out. So part of the conditions of when we set the competition up were that we had to have, a couple of micro caps, a couple of, mid-tier or, the multi-$100 ones, and then one or two over $1 billion or so, which is why we've got that variety. And I'll let Tony go into our reasoning behind that in a bit more detail. But we're allowed to have a wild card. We could pick it for, we didn't need rhyme or reason, like it didn't need to fit into the competition guidelines. And this was Thompson Resources. And the reason why I picked an absolute tiddler that was supposedly working on tin projects, it's because it's about knowing the area that a miner or an explorer is working in. Now, at the time, Thompson Resources was, and they still are now, they've expanded more, were working in the Lachlan Fold Belt out in New South Wales. Now, while it was definitely tin tenements that they had, they were picking them up either, I'm going to say south, actually my little notes here will tell me, they picked up a project just south of an old school gold field. Now, even though it was a tin project that they were prospecting for, if the market caught a tiny whiff that there was gold in them hills, it was going to explode in price. And that's exactly what it did do. Now, I will just warn anybody out there that, there wasn't really sound fundamental analysis behind this one. This was more of a, I'm going to play the market. And if the market will get excited if they find gold when they weren't expected to find gold. So, all the traditional methods of analysis that I normally use went completely out of the window on this one. And this was just a pure punt. And I was rewarded. I believe it did do quite well throughout 2020. However, that could have completely backfired on me too. But I do want to emphasize, while this one didn't have a lot of fundamental analysis behind it, a lot of my strategy around picking these stocks, especially the Australian small cap stocks that were just listed above, is about knowing the area. And something that I'm quite passionate about at the moment is neurology, or I think I've even made this word up, is simology. And that's basically looking at explorers or developers that are looking in areas where it might have a similar mineralization to a known large resource. Companies that fall under that banner that you just saw listed up there were companies like Krakatoa. Again, they're out in the Lachlan Fold Belt. They're out in porphyry country. So, basically, Cadia out in New South Wales, for example, the Newcrest own mine is a porphyry type of mineralization. So again, here with Krakatoa, if they stumble on a porphyry, the market is going to lose their tiny mind and get all excited about that. Now, Kalamazoo Resources.
Well, we've literally just heard from Kalamazoo.
Oh, look, I love listening to the guys at Kalamazoo talk. They get me really excited here. And I believe at the 2019 conference, I actually pulled Luke aside and I said, I need you to spread the word, mate. It's called the Victorian Gold Rush Renaissance. So I've told him whenever he's talking about Kalamazoo, I want to hear him talk about the Victorian Gold Rush Renaissance. And basically Kalamazoo was, again, an opportunistic play on not knowing a whole lot of the mineralization that's, deep beneath the old Victorian gold fields. And, I was rewarded, the Kalamazoo share price did some crazy, crazy things during 2020. So those were some of my top picks from playing the area strategy. A couple of others that did quite well for me, I believe the Theta Gold Mines. Again, now this one isn't based in Australia, but a lot of my thinking behind this idea for our competition was it's in the development stage. It's based over in Africa, and it's simply going to be a cheap producer when it comes online. It's not online yet, but it was a case of the market hasn't really paid attention to it because it's over in Africa, but they've got a low all-in sustaining cost. So that makes them very attractive to investors when a strong gold bull market hits. And, the US dollar gold price did some pretty exciting things last year.
Rightio. So those are some thoughts from the wonderful Shae. Now, Tony, we're going to come back to you, Shae, because one of the things I wanted to dive into, it's really important for people that are out there to understand, what do they do? What do they look for? And it's great to have advice from yourself and from Tony, because there's a lot of stocks out there. It can get very, very interesting and pretty volatile. So let's come back to you with a few comments, but let's throw across to the west. Let's go to one Mr. Tony Locantro. I'm going to just share my screen again and see if I can do this properly. Let's see if this, here we go. Look at that. God, I'm getting good at this Zoom stuff. Tony Locantro, stock picks. Now, I will say this. Both of you had Dacian, but that's the only common stock between the two, East versus West. The rest are all different. Tony, let's share with investors out there why, back in 2019, when we were picking these, why did you decide these were the ones to have a crack at?
Well, firstly, the only reason why this existed was Shae went well under in her talk, and I had about 8 minutes to fill. So Shae's one of those rare ones that actually finished a talk on time. Actually, early. She actually went early. So anyway, I had to come up with something. And I thought, what the hell? And I should disclose that Dacian was an absolute wipeout for us both. Mm-hmm. That was the biggest dog that we came up with. I think.
Okay, so Tony, let me stop you there, because that's really important for investors as well. You both chose Dacian. Mm-hmm. You've both said it was a dog, but is it still a dog? is it, and what was it that created such a big challenge for that company?
Well, the production didn't meet expectations, so they struggled with their production costs. The exploration didn't shape up as well as they would have liked, and they were in a bit of financial strife. So they had to do quite a dilutive capital raising, but I think they're getting their act together now. They are merging with NTM, which is a pretty handy gold company in their own right. So I think they're getting their act together, so to speak, but that was the one we both bombed out on. But looking at some of my others, Red Metal pretty much for some silver exposure, a bit of gold. It didn't do much during the year, no big discoveries. Hammer Metals, if there was another couple of 100 metres to run on the contest, I would have blown Shae out of the water. Because they had a major copper discovery up in Queensland. So they went to a high of 10.5. The stock almost tripled for us in a day. And based on my conviction of Dan Thomas and the management team, I bought quite a lot of that stock for clients. So that was a big win. We just celebrated only a week ago. Eagle Mountain, one of the highest quality emerging base metals companies on the market with a hint of precious metals. They are based in Arizona. Charles Bass is behind them. He was instrumental in Eagle Mining and Aquila. Alto Metals came under quite a few takeover attempts during the year. They had a bit of a run to 15, so that was a great payout for us. They still have that sandstone belt tied up, which could turn to a couple of million ounces. So that was a great performer. I like Godolphin because pretty much it's the definition of a perfect spec. They have high risk projects, but have some underpinning resources. So it's a bit like you've got a bit of both. You do have in-ground resources which underpin your valuation, but then you can go out and drill for a monster. And I still give that chance of replicating what Staveley did for us as well. So interestingly, I then went for some of the larger producers as per the competition. But to be honest, guys, I find it impossible to value a producer. You're prone to production costs. You're prone to debt levels as well. So I actually find the producers very hard because they do rely on institutional money flow. So what I look for in these stocks is 400 to 500% plus upside and a little bit of downside, which allows for some shareholders in a bad mood and market volatility, but pretty happy with the team I assembled there. And that's Daisy embarking in the background.
I was just about to say, you know what? One of the great things about this is we can't see Shae's dog. We're going to hear it bark. We can.
I've got one in the background snoring.
It's not barking.
Yeah, it's probably one of my many parcels getting delivered to my front door, in all honesty.
So look, this is really important, guys, because although we've seen the companies that you've chosen, I'm going to call it at the end of this chat today, but really there's a lot of people, some people that are listening today are seasoned investors. They kind of know what they're doing, but they still, I guess, with the volatility and what is going on over there. I do want to make mention of GameStop last week and sort of a Wall Street versus Main Street and what's going on there. But do you think the market's a little bit overheated at the moment? Do you think that people are there going to be challenges going forward? I'm going to throw that to you, Tony, and Shae, perhaps you can come in after that.
Yeah, I think it's a ridiculous. I looked on Twitter and The Big Short was trending. One of my favorite movies. I've seen it 35 times. There's actually people in the States that don't even understand shorting after watching that movie. And they're all asking if Margot Robbie could tell them about shorting in a bubble bath. So I found that rather hilarious. But this is just the youth. It's people that are tech savvy, people trying to stick it up these Wall Street funds. But it's ridiculous because they pick GameStop. And those that are unaware, that's the parent company of EB Games. So you walk past them in a shopping centre here in Australia and there's virtually no one in them because everyone streams now. So I think what they're targeting is short selling. And there was the statement rumor that GameStop was actually naked shorted, which means they sold shares that they don't own, hence the short squeeze. So all these groups now, there's like 3.5 million of them on some channels, and they're now targeting the silver price, bless them. But if they're thinking they can squeeze silver, I think they've got a bit of a battle ahead. And one of the sad notes or hilarious parts of it was then the ASX stock with the code GME pretty much doubled intraday and got a speeding ticket. And then they said, well, it's all part of GameStop. So this is absolute market madness. And it extends. Yesterday, I'm sitting in the coffee shop and there's a picture of a 16-year-old day trader on the front page of the Financial Review. And his surname was Tad Moore. And I'd say anyone following him, the surname will be a lot less.
Look, it is interesting, and I think it's very challenging times. And, you know, as I said before, do you think that the market's a little bit overblown? And what I'm seeing is a lot of people are, you know, we don't have the horse races anymore. Maybe some of the casinos are closed, and those people that like a punt are literally punting their hard-earned cash on a stock market that they don't understand. What would you say as a warning, Tony, to those sorts of people who literally are out there saying, oh, that looks like I mean, I saw a comment yesterday from someone who said, this is the way I make money. I see a stock rising, I put money into it, and then when it starts to fall, I take my money out. You know, I'm making millions. Oh my God. So investing fundamentals have gone out the window.
Yeah, the fundamental textbook has been thrown out. And the way I feel about the market is, on my stocks last year, making money was far too easy. I've had some success with that discovery. I've had some success on biotechs I've floated. I've gone out and spent $135,000 of my own money on the BBUS ETF, which means that for every 1% the Dow Jones falls, I'm going to make 2.5% on my money. And my theory is that when the Dow gets thumped, and it will, because it is overpriced, that ETF could make me between 50 and 100%, which will give me funds to buy my other stocks. Now, if the US market tiptoes through the tulips and goes sideways, which I don't think will happen, I'm going to make enough money out of my portfolio to cover it anyway. So I've felt no fear in spending. I mean, I could have bought a sports car with personalized plates, but I chose to buy an ETF. My partner's Louis Vuitton pink diamond and bags, whatever, can wait. But that's how much conviction I have that the world's gone batshit crazy.
So, Tony, so the BBUS, which is an ETF, so would you say you're hedging your bets because you feel like the US market's a little bit fired up to the upside at the moment? Is that what you're doing? Is that like just balancing it out to make sure that if something goes terribly wrong, you're not going to be caught, sorry to use this analogy, with your pants down?
I have the conviction that the US market is overvalued. I've gone against buying the BB Oz, which is the Australian market product, because there's always a chance that Australia could become a safe haven. And we might have our own Japanese, Scandinavian, Mexican style bubble. And there could be a shitload of capital that comes into Australia and pushes up our stock market and asset prices. So I'd rather bet against the decaying US economy, decaying US social situation. The Dow Jones did fall below 20,000. I think it could be like sandpaper to death on its way into the 20s, into the lower 20s. So to me, based on building a sizable portfolio, I'm suggesting to my clients that they have 10% of their holdings in that ETF, because going short, often the thing that beats you is time decay and premiums.
It's very good advice. I'm going to come back to you, Tony, in a moment, because I want to talk about gold and silver prices as well. But Shae, over to you. What are your recommendations in this current market? Because you've got, you are the chief editor of Daily Reckoning Australia. You've also, you make recommendations to your subscribers, and we'll talk about that at the end as to how people can link up with both of you. But what are your thoughts on this crazy volatile market at the moment, should people be putting their hard-earned wealth into safe havens, or should they be taking a punt on some of these, and some of these companies that we had up on the screen before? Not that we're, by the way, none of us here are saying go out and buy any of these stocks. And I, for one, am not a financial advisor at all. You must do your own research. But Shae, what are your thoughts on the current market and where we're sitting?
I have to say, Kerry, with what Tony just said, there's an awful lot to unpack there. And I do agree with him that Australia has the potential to become a safe haven. And I think I'll jump onto that later. First things first, I just want to talk a little bit about the GameStop thing. Now, I know it's a little bit irritating that it's probably taking up so many of their headlines, but I think seasoned investors need to pay attention to the wrath coming through from this investor activism. I don't actually know what we're going to end up calling it, but that's what I'm seeing. We've made the mistake of holding up Wall Street as an aspirational career. So there's been people who have wanted to become something like that. And in Australia, we know we've got Macquarie Bank, which we often call the millionaire's factory. There are people who want to play with the big boys that have been shut out from that market. And Reddit and GameStop is an example of what happens when you monopolize people who are angry or just want to take a punt. So I think we shouldn't write it off as a once-off. I think we need to be very careful that this is something that we could see happen going forward. Now, obviously, there's a whole bunch of laws around this that prevent collusion and things like that. But we've gone and poked holes in some of Wall Street strategies, and investors really need to pay attention to this sort of investor activism that we're going to see happen online. I don't think what we saw happen this week and last week is the last of it. I think it's going to happen going forward. As for recommendations in this market, you know what? I agree with Tony. I think the US market is at unbelievable highs, but it's one of those things, you sit back waiting for the bubble to pop and it continues to just go on to new highs. From a US market point of view, I'm spectating at the moment. I don't have any money in the US market. I am quite focused on the Australian market. I take more of a long-term approach. So I'm looking at companies in subsea cabling, in technology. Emerging tech in Australia isn't hitting the insane highs that it's hitting over in the US. Much to my detriment right now, I'm quite focused on gold stocks, although they seem to be having a bit of a sell-off. But also too, I'm quite focused on the commodities market. So I'm looking at commodities that are going to play a huge role as part of this new energy transition, but also things that are technology related that are going to help the Australian economy, take that next leap into how we're going to do business.
Righty. Oh, sorry, I'm just having a little technical issue here. I wanted to do a boom, but I couldn't do it. I'll get there. Let's do it, because we're going, ladies and gentlemen, we want to have a little bit of fun. So here we go. We're just going to go boom. But that's as good as it gets. Play from current slide. There we go. Boom.
Boom.
There we go.
Boom, boom, boom. Let's just go back and talk about some of your stock picks. Shae, any of those standouts for you? Of course, you'd probably have to say Kalamazoo because Luke's just presented, but any surprises from, because these were chosen, as we said, back in October of 2019. Apart from Dacian, which we talked about earlier, which, Tony, would you put that down to bad management? Because I often say to people, you've got to look at management. Have the best asset in the world. If the management's no good. Do both of you agree that management had something to do with that?
Oh, I'd say more to do with the gold grades and the financial situation. I'm not here to say anything negative about management. Obviously, we both picked it for a reason, but things certainly went against us. So they have had to do quite a large capital raising, obviously at a cheap price. I think it was about 40 cents. So it's a combination of factors, Kerry, but I had no hesitation in picking it. So we always had to have one that didn't perform that well out of the lot.
Couldn't get 100 out of 100, could you? So no. On that one, we'll go boom.
I think it's hilarious that both of us picked the one that underperformed. Yeah. Out of everything on our list, if you have a look at it, that was the one that absolutely tanked. Yeah, look, it disappointed the market. At the time we recommended it, it was seen as a really strong contender in the Aussie market, and then it didn't, because it just all disappeared.
Yeah. So if for those listening, and as I said earlier in this chat, you know, there are seasoned investors out there, but there are also people that are just because it's getting into mainstream media, because of the GameStop fiasco last week, you know, there's people that don't even understand what's going on in the markets that are starting to dip their toe in the market. So I'll start with you, Shae. What advice would you give to people that don't understand this market as to what they should be watching out for and what to be careful of in terms of investing in this crazy market?
Believe it or not, I think one of the greatest tool a new investor can have is investopedia.com. It explains almost every single term that is used in the market. Now, this market is full of jargon. And while, you know, this is going to sound like a blatant promotion for myself, but over at the Daily Reckoning, one of my pet hates is people who use jargon, because it alienates people from getting involved, and people feel like if they don't understand the technical terms, they just bow out. So I don't use jargon in my work. But if people don't understand a phrase, go to investopedia.com. It is a great free resource. Now, there are plenty of free resources to help you understand something on the internet. You actually don't need to pay for advice. However, you do need to have the courage of your convictions and don't act on gut instinct. Every now and then I hear somebody say, oh yeah, my gut told me it was a good trade, and it does really well. And that's called luck. That's not you being a great investor, that's luck. But the best thing is to do your own research. You know, don't just use the internet to look at cat videos or videos of skateboarders hurting themselves, which is a bit of a trend in my house at the moment. Use the internet to your advantage, because there is plenty of free information out there to help get you started. If you don't feel like you understand somebody who you're reading about, ditch them. Find somebody else who is speaking on your level and your language, because you know you can always step up to the next one. As for sectors of the market to look for, I think anybody would be crazy to rule out commodities. I see an unbelievable boom coming in certain types of commodities, and it's largely to do with this energy transition that's underway. So I think investors would do well to look at companies that are not only trying to dig the stuff up out of the ground, but also trying to process it. We don't have a lot of mineral processing or metal processing facilities in Australia. So I would definitely keep your eye on that sector and look out for those.
Well, I do want to, you know, this is a gold conference. Shae, I know you've got a view on this. That little gold price, it's been trending sideways for quite some time now. I know you're fairly bullish on the gold price. Do you see 2021 as being a little bit of a game changer? Look, none of us have got crystal balls, but I always say to people, don't sell your house and your children, but you should have some exposure, not only just to physical gold. I always say people should own physical gold, but the leverage with the gold mining companies can be quite interesting at this particular time in the market.
Look, you know, now we're talking about my favorite subject, Kerry. Listen, first of all, on the gold price. So hang on, what we'll do gold price, then we'll move into why you should own gold. Look, I'm a long-term gold bull, but investors need to realize that this is a temporary pullback in the gold price. I've been talking about it over in my newsletters that gold is going to stay range bound for the next few weeks. One of the arguments at the moment is, well, Joe Biden is proposing a US $1.9 trillion stimulus package. So surely gold should just catapult out of the sky and we should start seeing a strong rally. One of the interesting correlations gold has with stimulus is that the proposal of stimulus doesn't drive the gold price higher, but the actual confirmation of the gold package does drive the gold price higher. So right now it's just whispers and rumors coming through. I believe that particular package is going to get some resistance in the US Senate. So it could mean that the gold price doesn't really have that catalyst to kick it up to the next leg anytime soon. In saying that, I've got a couple of predictions for gold this year, possibly to my at my peril. I think the days of being able to buy gold under $2,000 per ounce are numbered. I think this year we'll see the gold price close above $2,000 per ounce, and we'll look back, you know, a couple of years from now and go, that was my window, that was my chance to get into gold under $2,000 per ounce. In saying that, I'm not entirely convinced we're going to see gold make any permanent sustainable high over the high of last year, which was $20,070 or $2,070 something. So I do think we'll see gold make a slow rise. It'll come out of this funk where it's stuck around 1850, but I don't think it's going to, take off like a rocket. Everybody seems to be waiting for the gold price to kick off, and that's just not how gold works. Gold is kicking off. It has kicked off. The fundamentals have been laid. The US government is going to continue debasing their US dollar come hell or high water. The gold price is just going to move, slowly up, but it's just not going to go in a straight line. We do need to weather a few dips along the way.
Well, and that's what I say to people. A lot of people come to me and say, look, I'm investing in physical gold and I can't wait for the price to go up. And I always say to them, you shouldn't look at it as an investment. It's protecting your purchasing power, which is a completely different reason for, placing some of your fiat currency, your funny money, as I call it, into physical gold. And if you're looking at investing in ASX listed gold mining companies, that's for the leverage. So thank you for that, Shae. There's really important comments there. But Tony, let's talk about those ASX listed gold companies, because I know, excuse me, I know that you've got a few that you like at the moment. And without going into specifics, what are your thoughts on the gold price and the gold, more specifically, the gold mining companies for 2021?
Well, I think Aussie gold investors have been ripped off a little bit based on the performance of our currency. The Australian dollar looks as though it was going to go into the mid-50s and stay there, but COVID unfortunately has seen our currency quite strong. So Aussie investors who bought near the peak around 2,800 have seen that come off $400, give or take. So I used to forecast the gold price 18 years ago. I've given up doing that because nobody knows. And my focus has been on finding the next Northern Star, the next Ramilius. So I look at the management teams, I look at projects, I look at who can drill out an area and come up with a resource, because that's where you get your uplift. So for every million ounces, the company's valuation can be between $50 and $100 million. So, I think I've had the odd miracle where a client bought Northern Star and held it all the way to $13.77. But those days of having Bill go in and buy all these gold mines, it's hard to come by now because asset prices are high, and that method of acquisition is going to become quite hard. So what I say to my clients is, I'm not worried about the price. Let's go in and find the right management team to back. Let's look for the market cap that's low. I'm trying to identify teams with the capabilities of someone like a Bill Beeman or a Mark Zentner from Ramilius and apply that to a small cap. And that's where we're putting our money. And I saw that in Dan Thomas and Ziggy at Hammer, but they made a copper discovery out of left field in Queensland. So I've identified one stock in particular. I've told my clients just to keep buying. Don't worry what you pay for it. This is the best technical team on the ASX relative to the market cap. And I think there's 5 to 10 upwards times your money on that, as opposed to sticking to the producers, which are now at the whim of institutional money, short sellers. Those big fund managers, that position could be less than 1%, and they're quite willing to throw that out. Plus, you've got production risk, and these stocks are covered to death. So rather than go in and be everything to everyone, I'm sticking to my niche, and that's finding big companies that were previously small ones.
So, Tony, are you suggesting, for example, I mean, you did mention Northern Star, but there are others out there. Are you suggesting that once a company becomes a producer, is a certain sort of size, it's not something that you look at these days because there's not enough upside? Are you saying that, the instos come in and it doesn't give as much leverage? Is that what you're saying with the bigger companies, and you're always looking at the smaller ones?
Absolutely. And I can't go in and value that company. I like to put clients in a stock that I can value. I've got a rough valuation. I factor in everything. then once I've factored, it's a bit like making a soup. You've got to throw everything in. You've got to have that right flavor combination. And then suddenly, believe it or not, I never recommend a stock unless it gives me a certain feeling. I can't describe it. It's taken 22 years to get there. But I just think that a lot of these producers are too prone to the gold price, one mine disappointing. And it's kind of, at these prices, they can be like a red or black scenario. And our gold companies are getting bigger. They are merging. So the upside is probably more geared towards funds than mums and dads looking for the next 5 to 10 bagger. So absolutely, I've got no interest in buying stocks that are heavily covered. I'd rather be buying the absolute crap out of something that I know that will become mainstream, and I've done it, so I might as well keep doing it.
Would you recommend, if for somebody that's a newbie in this area? I mean, for example, I know that Northern Star and Saracen, they're merging, but they'll be paying out a dividend, small, but it is a dividend player. So I think is evolution. Would you recommend people that are out there just having a look at this to maybe park a little bit with some of the big guys, because it does give them a dividend? And the fact of the matter is, we are living in a very low interest rate environment, so at least they get some bang for their buck. And these big companies they're literally throwing money, they're making money hand over fist at these prices.
I don't have any problem with that at all, but there's been no greater destruction of wealth than in the hunt for yield. So you've got to be careful when looking at dividends. But the time to have bought a stock for the dividend would have been Evolution at 42 cents, when I think they were paying about a 2 cent dividend.
Yeah.
So I think the best of the dividends, the best of getting the higher yields, certainly has passed. And what I'm looking for now is the renaissance of the small to mid cap gold sector, where companies, rather than going out and finding ounces, it'd be cheaper for them to buy it. But I don't have problems with clients wanting to build a portfolio of gold producers, but your upside is certainly limited as opposed to finding a quality junior. And I've pretty much made it my mission to only focus on the tiny to small caps.
Shae, over to you. What are you recommending to your subscribers at the moment in this? You know, it's a market. Look, I'm an investor. I can't pick it at the moment.
Yeah. Look, it's a tough market to trade. I wouldn't want to be a trader, so I take more of a long-term view with the recommendations I make. If I'm recommending a company, you know, we're not in it for a couple of months. We're in it for a particular part of its cycle. I just want to come back to something that Tony said, and you mentioned, Kerry, is if you're looking at producers, I wouldn't recommend looking at them for dividends. I mean, you can get dividends from a whole host of other companies. Don't buy a gold producer because it's paying a dividend. That's not what they're there for. You know, stick to your telco, stick to your utilities, look at a bank if you really want an income producing stock. Your big producers are really just a leverage to the gold price, although, as Tony pointed out, they do come with their own production issues. I do think if investors should definitely keep an eye on mergers over the next 2 years in the Australian market. We've got some fantastic mid-tier gold companies that I think will be gobbled up by even bigger companies. You know, the merger of Saracen and Northern Star is just a taste of that. Single asset companies, so companies with really only one mine, but a strong exploration pipeline, are going to get gobbled up by somebody bigger. We do need to see some consolidation in that sector. So if investors are comfortable, you know, assessing gold mines, then I would definitely keep that in the back of your mind. Look, to be honest, I love explorers, and I don't know, again, if that's to my detriment or not. I'm really excited about the opportunities present in Australia, and I'm going to completely rip Rick Rule off here. He's made a quote about the Australian market, that Australia is well prospected, but it's not well explored. And I think there's power in understanding how little Australia is being explored at depth. You know, Minex Consulting have a great presentation that they put out where they talk about how, on average, Australia is really being only explored to around 300 metres in depth. Now, obviously, you know, we've got mines that go far deeper than that. But there is an unbelievable wealth of minerals and metals underneath our feet. So this is why I'm looking at explorers. This is why I'm looking at well-funded explorers as well, who have the ability to sink a couple of drill rigs into the ground and just see what's there. And if you are going to get into the explorers, they're certainly not for the faint of heart. They can be a quick way to blow your money up, I'll be quite honest. You want to make sure that these are people that have experience exploring. You don't want somebody who's just moved over from South Africa and they're now exploring the Australian market. You want somebody who has exploring with the age of those rocks. You want a management team that understand how to control an exploration program. And also too, you want to be looking for, if you want to do the nearology play, if you're new to explorers. If you're more comfortable with explorers, then you're happy to go into untested waters. But if you're, you want to look at nearology, so who's sniffing around Tropicana out in Western Australia? Who's sniffing around Cadia out in New South Wales? There's some, sort of the building blocks of what I look for in this type of market.
Can I tell you guys, this time has gone so fast. We are nearly at, excuse me, see you go, don't lose my voice. We're nearly at the end because I want to give people 5 minutes to go and have a quick break before we hear from actually one of the companies that you've mentioned, Tony. Godolphin Resources is up next. But before we hear from them, let's figure out who is the winner between East and West. So here we go, a little bit of a share screen. What am I going to be doing? I don't know. Hang on, slideshow. Pow! Who's going to win? You know what, Tony, you were the man with the numbers. Go for it.
Well, you're not going to believe this, that we both ended up in the mid-90s. Mid 90% return for the year. There could be some conjecture of a certain stock as to its opening price, but all the work I've done would suggest that this is too close to call.
Oof.
And we're pretty much a tie. And I'm happy to call it a tie because it's way too close. And I think you'd probably need to employ Pricewaterhouse forensic accountants. But neither of us are going to lose our careers over it. I think Shae's picked some absolute ball terror of stocks. Thompson was a great one. So, I think we both performed over 90% for the year, Kerry, and that's well done, Shae.
Well done to you,
Tony. What can
Tony.
I say but Shazam?
Yeah, and the only winner today is the gold and stock picking industry. Kerry, there's no losers.
Guys, I just want to say thank you so much for coming on today and for sharing some of your views. For anyone that wants to get a hold of you, Tony, best way for people listening, how can they get a hold of you? If you have any spare capacity.
Well, I keep saying no more clients, but there are a few that will write me a sob story. Tony at altocapital.com.au, but I'm just absolutely snowed under trying to look after people that have been loyal for 20 years. But anyway, eventually, if you do send me an email, be patient. I'm still working through a lot of queries, mainly from our small cap interviews, Kerry.
Yeah, I was going to say, if you want to hear more from Tony in the future, Tony and I do a fortnightly update on small caps. And the next one will be, in fact, next week. So Tony and I will be back on board next week. So you want to hear some more of Tony's views, tune into smallcaps.com.au and we'll have a chat next week. Tony, thanks for joining us today. Shae, how can people find you? You're not Daniel Ryan, you are Shae Russell.
I am Shae Russell, not Daniel Ryan. Look, there's a couple of ways of finding me. There is the dailyreckoning.com.au. That's where my free e-newsletters are. And that's where you get a little bit more of my musings than just on gold. I talk about all fun things and certainly take a few jabs at central bankers and politicians along the way. Also too, if you're up for some of the random stuff that comes out of my brain, you'll find me at Twitter and my handle is Shae A. Russell.